Check. 1 2 3, 1 2 3. How's everyone? Good to be back. I think I'm doing a video after like 4 or 5 days gap now suddenly, because I think the last video we did was on Saturday. But how's everyone? How's everyone doing? I think today we're looking at the market and it's very weird today. So first, let me tell you what I'm going to do today. Okay, I'm going to talk about the pharmaceutical sector. I'm going to do a little bit of industry overview first. Then I'm going to show you 3 stocks that I believe are very good for the long-term perspective with respect to holding pharmaceutical stocks. And I'm also going to look at what is happening with the current market, a little bit about that. We'll look at the pharma index and what is the future scope for all these in different industries. Okay, so today we're going to do all of that. So I hope you guys are excited. I hope you guys know everything. I'm excited to start this episode. By the way, pharmaceutical industry is slightly complicated. Usually it's not the most easiest industry to understand, but I will try to make it as simple as possible so that all of you become smart in the pharmaceutical space. Okay, at least little bit basic idea I'll give you guys. Ready? Let's go. Chalo. Let's begin. Okay. First thing I need to look at is, boss, what's happening with the market. Now, remember we spoke about this on Saturday and we saw the market going down on Friday and we were scared because if it keeps going down continuously, then it is going to become a big issue for us because it would have broken some resistance and supports and it would have actually gone down. But luckily, the market slightly went up and it is doing well right now. And if you look at Star Health's IPO, subscribe 7% on debut, so not that great. But again, we will have to wait for 3 days, another 2 days to check it out. Omicron was the biggest problem that happened over the weekend, where we saw this new variant of COVID-19 happening in South Africa, and then we saw a few cases in Bangalore as well, which did leave a small scare in the market. But now we are all okay. Right now we're all okay. Chalo. Now let's see what's happening with the market. The market is up today. So a lot of people who were seeing the red now finally are seeing green, especially today. Now let's look at what is happening with the pharmaceutical sector. Okay, I'm going to start sharing my screen. One sec, not sharing this. I'm going to start presenting my screen. And don't worry, if you want more information, I am going to share this presentation with you guys after this episode gets over. Chalo, let's begin. Now, first, we're going to do a quick sector analysis, company 1, company 2, company 3. I'm going to look at different things as well. Now, for the first thing, right, if you look at the pharmaceutical sector in India, okay, so Indian pharmaceutical sector has basically grown 10 times in the last 20 years, in the last 2 decades, and basically because of its strength in the global generic space. Now, basically the growth of this market has been from 4.2 billion to 41.7 billion from 2000 to 2020. So the pharmaceutical sector has been growing, so it is not bad at all. Now, what has happened, which was very shocking for a lot of people, was after COVID, right? When COVID hit and after COVID, when we saw that big dip happening in March and then we started going up into this bull rally, after COVID, we realized that the pharmaceutical sector had a massive impact to play. Why did the pharmaceutical sector do really well? Lot of reasons, right? One, China was shut down and most of the APIs and most of the raw materials, most of the generics were coming from China. China shut down, automatically India became the next big hub. We also did something known as Make in India project, where we saw a lot of different companies from different worlds coming to India. India started improving their manufacturing capacities as well. A lot of capex went in and we started becoming the global hub for pharmaceuticals, and we wanted to become the global hub for pharmaceuticals, right? So basically we took a lot of share from the pre-existing China market, which was great. So but who won? Okay, who won that game? Who is winning that game? And what is going to happen? And we started exporting a lot, right? The Indian pharmaceutical works in a way where we export a lot. So please understand that. Now, Indian pharmaceutical strategy or Indian pharma sector strategy is basically to become the preferred global supplier of innovative medicines in the post-pandemic world. Now, you might think, guys, okay, you know what? Let's make a medicine. Let's make it very simple. Now, there are companies, okay, understand this very clearly, okay? There are companies doing medicines, okay? There are companies that sell medicines, okay? So we get medicines from a certain pharmaceutical store, we get the final tablet over there. So there are companies that actually sell these medicines, and then there are companies that actually give different ingredients for this major company to sell medicine. So if I'm selling a particular medicine, then I'll call up another person and say, listen, this one, one kind of a chemical I need from you, or one kind of ingredient I need from you. Can you make this specific ingredient which will be used in my final drug? So that is also what happens. So in the industry right now, there are people who sell drugs, there are people who help manufacture the ingredients for the drugs as well, and this happens on a global scale. Okay, so globally companies come to India and say, "Oh, ek ingredient, I want that one ingredient. Can you make this one particular ingredient for me?" And we all know how much what big business this pharmaceutical industry is, because whatever happens, human body is a very flawed system. It is not perfect. Nobody's body is perfect, and we will need medicines for the rest of our life. Jo bhi hoga, we will definitely need medicines. In fact, later on in our life, we will need more medicines, right? So it is a ever booming, everlasting business. Now, what is happening in the Indian pharmaceutical space? Basically, now Indian pharmaceutical space needs to basically focus on something known as value chain or supply chain, right? Now, what is happening earlier in the past? Just to give you a brief understanding of this space, Indian companies used to import raw materials. Okay, so someone will come from abroad and say, you know what, that one ingredient can you make? I'll be like, cool, you know what, I'll make this for you. Okay, but then I'll be like, oh shit, I need more raw materials to make that raw material. I used to go to China and get these raw materials, and now China used to charge more, so I used to be in a big issue. Then a lot of drug companies in India started becoming smart. They said, you know what, I don't want to go to China, I will manufacture this ingredient here. If this is a base raw material ingredient and can be used in multiple drugs, I'm going to manufacture this here in India. So they started building manufacturing hubs inside to be less dependent on other people with respect to raw materials, and they started making their own raw materials. Now basically that was increasing the supply chain. That's called backward integration, right? And they started doing forward integration also. Basically they want a full supply chain ready. So earlier they were doing only one thing, then they started doing backward, now they're doing frontward, and now they're trying to be a whole holistic approach with respect to pharmaceutical space. Now there's opportunity where? Okay, where is this opportunity? The opportunity is basically in complex generics, specialty pharma, specialty chemicals, biosimilars. Biosimilars is very similar to a generic drug. I mean, basically, it's not the exact same drug, but the biogenic is very similar to that drug. Then we have novel biological drugs, vaccines, preventive, and other basic medicines, right? And we are trying to become the global innovation hub for the future. Now, if you look at India, what we are trying to do is we are trying to become the next big hub, and we are helping companies in India, helping manufacturing plants, helping pharmaceutical companies to set up different capex outcomes so that we can get good policies for them, and they can actually start becoming very big. So the government is also helping pharmaceutical sectors here. Now, what is happening? Where are the opportunities in the Indian pharmaceutical space, and what is moving up in the value chain, right? Now, biosimilars and new chemical entities, NCE, two places where we are seeing a lot of demand coming in. We also saw a lot of demand coming in the CRAM section, which is contract research manufacturing. Basically, I am doing manufacturing and research for somebody else. So all these things are coming, but the only problem is financial constraints are there because we don't have access to a lot of money. So if a pharmaceutical company wants to expand its business, either they have to do it from their own revenues, number one, or they have to come IPO. But now if they come IPO, they can't raise more money after that. So they have to go take a bank loan. And then if you take a bank loan, then what will happen? Interest is there. So it is not very easy, like, say a business where you can just get VC funding and just keep opening manufacturing plants on an equity perspective. So that is also happening right now. And what is happening with the current problems? Okay, high therapy cost, which is now they're trying to become a low cost provider. Complex manufacturing process is now being simplified. Lack of system to connect to all the stakeholders is also now coming with respect to IT and GST. IT sector is also helping the pharmaceutical space. And if you look at Tata Elxsi, they're doing a lot of things in the healthcare space as well, right? And basically the cost of talent is also going down because now a lot of people are realizing that there is a lot of money in the pharmaceutical space, and India is becoming the new hub for this as well. And just to give you a brief idea, see guys, whatever I'm doing right now, the first part is for you to get a basic idea of the pharmaceutical sector, right? And what are the problems, what is happening in the space. Now, basically, we had limited resources and lack of motivation because money was not there in India at one point of time. And there's very limited resources because we were not there in the global race, right? The innovation was happening in US and Europe, and with all the other companies that FDA approved and all that, we were not even in the race. But now we are becoming smart and we are becoming the global hub. Why? Now motivation is coming because paisa aa raha hai, a lot of money is coming and resources also are increasing right now. And a lot of scientists are coming up in this space as well. So all these small things adds up to the different ways that the pharmaceutical sector will build. Now, just to give you guys an understanding, you don't have to go deep into this, but this is the existing drug regulatory setup in India. This is only for your education purpose. So if you want to do discovery, there's Ministry of Science and Technology. Development and product registration, there's Ministry of Health and Family Welfare. Then you want to start manufacturing a drug, okay, you have State Department of Health, SDH, right? Then you want to do drug promotion, then again MOH, FW comes into that picture. Then you want to do drug pricing, you want to price the drug, then there is again Ministry of Chemicals and Fertilizer, it comes under that. Supply chain, again under two more things. Pharmacovigilance, again comes under two more things. So do you see that currently the system is this too many different agencies to go to? Remember, we say that sometimes in India, right, if you want to pass one file, it takes a lot of time. So this is exactly how it looks right now, because there are different bodies right now for in the chemicals, in the pharmaceutical space, to even approve something, right? So if you're in this area, this is so many steps that you have to actually do, which is I'm assuming it will become better in the future, and if it becomes better in the future, we'll see more innovation coming into the space. Now, if you look at the formulation market, right, innovator versus generic, who is the innovator, who is the generic? If you look at the formulation space, the innovator has always won, and the generic is slightly less market share, but enough market share. It's not like the market share is less. And if you look at the Indian pharmaceutical industry, whom do we export to? We export most of our stuff, most of the exports go to USA, then UK, South Africa, Russia, Brazil, but USA takes maximum amount of exports from India, right, or imports. They take imports from India in the pharmaceutical space. So US is our major player. So hopefully US should always keep taking from us and not take from anyone else. That is the basic idea. Now, if you look at who is growing in the global pharmaceutical space, obviously North America, Europe, and rest of the world are great. But if you look at China and India, if you look at India, India is growing really fast right now. Even though our market share is 2%, okay, 2%, our CAGR is good because we're slowly becoming the new hub. That is why it is becoming really better, okay. Basically, what I'm trying to tell you is, in the future, pharmaceutical space and India will coexist as a very good hub, assuming that China doesn't recover very fast and they don't come and undercut us on the pricing. That's why Indians are now automatically doing backward integration so that they can get the raw materials at very cheap rate. Cool. Now, first company, obviously my favorite company, and a lot of you guys already know this company. A lot of you guys should have taken advantage when it crashed. But the first company is Laurus Labs. Now, before I get into the company, what I'm going to do is I'm going to show you something, okay? Now, there is something called as a Nifty Pharma Index. So this basically talks about, this is basically the index, like how we have the other indexes. This is the Nifty Pharma Index. I'm going to show you the max chart of Nifty Pharma Index. Now, in max chart, Nifty Pharma Index has only performed 17.38%, okay, overall, which is not great. And index means things will come inside that index, companies will be come in, companies will be removed, and depending on the constituents. And if I show you who are in this constituent right now, I'll show you, right? Abbott India is there, Alcom, Alembic, or Aurobindo, Biocon, so many other, right? Biocon has not moved a very long time. Cadila Healthcare, Cipla, Divis, Dr. Reddy, Glenmark, Granules, Ipca, Laurus. There's a lot of companies in this index, and this is basically an idea of how this index is moving right now. So if I just show you something, right, look at this. This is after COVID. Till then, the trend in the pharmaceutical sector since 2015 has been in a downtrend, right? Nothing was happening because there was no trigger. Immediately after COVID hit and we saw the next bull run happening, the index itself went up by 100%. Just imagine how many stocks inside, how they have rallied over time, right? So the index itself has gone up so much. Okay, coming back to I want to show you that as well. Cool. So if you look at Laurus Labs, again, what does Laurus Labs do? I've done a lot of videos on Laurus Labs, but I'll give you a quick introduction of Laurus Labs as well. What do? They're into 4 different businesses. One is API. Okay, so they do development, manufacture, and sale of APIs and advanced intermediates. These are things that are required, which are also APIs, basically known as active pharmaceutical ingredient, which is required to make the final drug, right? Then they also do something known as finished dosage form, which is FDF, where they develop and manufacture oral solid formulations. Then they have Laurus Synthesis business, which is again APIs for new chemical entities, NCE, that is, we saw that is booming right now. And they have the Laurus Bio segment, right, the biological segment. Now, if you look at them, you need to understand this about Laurus Labs, that most of their revenue comes from one particular sector. So they do a lot of antiretroviral drugs, right? And this is basically they're giving it to countries that are low cost countries, like countries that don't have a lot of money, who are suffering from hepatitis and HIV. So they do a lot of exports to those countries. Just to give you an idea, look at this, right? If you look at the business mix, APIs is 43%, FDF is 41%, and rest is quite small right now. And major markets that they have are LMIC, which I told you, right, the low middle income group countries, which is there, and they do a lot of exports to this region right now. And if you look at API, it gives you 54% revenue contribution is coming only from the API segment. They have massive manufacturing unit, and they're constantly investing back into their manufacturing segment. And even now they did a massive capex, and we saw the price of the stock going down because the growth will slightly go down if the capex is becoming so much. But the minute the capex is done and the manufacturing new plant is set up, you will see massive run. Again, the stock will start running quite extensively at that point. With FDF, they have 35% revenue contribution. Don't worry, I'm going to share this with you, and then you can go look at it peacefully afterwards, right? Next. So this is something that they have, the three segments as I told you about. Biologics is the new segment right now that they're currently focusing on, but the majority of revenue comes from segment 1 and segment 2. And basically they have good market share gains in the ARV portfolio. Again, you can have a look at this. These are all the things that I've put on the right. Obviously Devjani has helped me a lot. All of these things are there. Now this is, again, if I want to show you from, I'll show you the financials as well. What makes Lotus Labs unique? They have good R&D. They've actually been doing really well on R&D. They have never shied away from doing capex. The management team is very, very, very strong. Backward integration strategy is there, and also they maintain cost competitiveness, right? And let me show you the company here. If I show you the max chart of Lotus Labs, you will see that it did not move for a very long period of time, and then it just suddenly shot up from 2020. And it became like the darling of a lot of people. And if you look at Lotus Labs, it's at 26,000, almost 27,000 crore market cap. In fact, it was at 700. It's fallen down almost 30% since its rise. And if you look at it, it's actually fallen down 37%. Recently, it's fallen down 37%. Till then, it was just rallying. This is a daily chart, and it has fallen down by 37%. Why? Because of the massive capex and the earnings estimate that came out after that. Now, this is going to take some time to actually start going back up, but it is a good time to accumulate is what I would say. And if you look at their financials, their financials have actually grown a lot. So 2000, 2300, 2800, 4800. So massive growth now post COVID. EBITDA also massive growth. Why? Because they had done a massive capex some time ago, and their manufacturing unit opened, and they start getting a lot of revenue, right? Now, promoter holding is not very less. A lot of people think promoter holding is very less in this company. It is not less. Promoter holding is basically now transferred into a new entity. Basically, he did that to save taxes on dividends, because dividends are actually taxed a lot. So basically, promoter holding has been moved from his holding into a new company's holding, but basically it's from the promoter itself. But knowing the promoter, he's always, if you hear the con call reports and if you hear his conference calls, he's actually been very vocal and very promising about what is happening. The next company, yes, some of you guessed it right. This is a consistent compounder. So I showed you one company which is in the 27,000, almost mid cap, right? If I showed you one company which is in the 27,000 crore market cap, almost in the mid cap-ish, large cap is, I won't call it, I call large cap or ultra large cap after 1 lakh. I call anything around 20k up is around mid cap. Now Divis is in the large cap, mega large cap category, right? Above 1 lakh crore company. And this has been a consistent compounder, right? Let me show you what it does. So Divis, if you look at the max chart, it has been a consistent compounder over different segments, over different periods. Even if you ignore the COVID period, it has still done really well over time, right? And it has consistently proven to do really well. It is a nice consistent compounder, currently at 1,30,000 crore market cap, and has been giving good results time and time again. And if you look at the revenue, you will see that the revenue is obviously going up. Everything will look good automatically. The main reason why everything would look good is because the stock price, as soon as you see an upward movement on the stock price, that means the market is also favorable with respect to Divis Labs, and even in the last 1 year, it's given around 35-36% gains. Now, looking at what they do quickly. So Divis Labs, again, they're into two broad categories. One is the API, generic APIs and nutraceuticals, and the second one is custom synthesis of API, which is again active ingredients, right? Now, they do APIs, intermediates, specialty ingredients, and they're also for the innovator segment. They're not in the generic segment, they're in the innovator segment, and they do this for innovative pharma giants. So they do this for very big companies. And if you look at their total income, distribution of total income, 34% of their income goes into cost of raw materials, which is very common for a lot of pharmaceutical companies. And if you look at their company, 88% of their money comes from exports, okay? And 88% of the money comes from export, and top 5 products give them 49% revenue. So this is good. Why? Because it's slightly balanced right now. It is not too hindering towards one thing. They're obviously there on a global presence, but if you look at most of the revenue coming from, most of the revenue doesn't come from US. For this company, most of the revenue comes from Europe. 47% of the revenue comes from Europe, and it has been consistently coming from Europe, right? Second is 23% from America, USA, and then we see the remaining coming from Asia and India, around 12 to 13% stake from Asia and India. Cool. Hope you guys are catching the thing, right? Again, they have backward integration, good operations, good capacity, and good community engagement. And what is happening with Divis Labs, let me tell you why they're good. I'm going to skip this slide. I'll tell you the major slide here. Basically, they're into contract manufacturing as well. So basically, they've built a very strong CRAMS business. And basically, the CRAMS business is also planning to grow by a CAGR of 9%. So that is also there. They're also very good with respect to backward integration. So they also do a lot of R&D, and they have long-standing relationships, and this is very important, with 6 of the top 10 pharma innovators. So they have massive understanding from that perspective with a lot of big players in the space. And if you look at their growth trajectory, right, they had done a massive capex in 2018. Okay, they did a massive capex then. Now again, they're doing another capex. Now a small capex is coming up as well. They're trying to build capacity. Now if you look at Divis, right, I'm just giving you an overview perspective. If you look at Divis, they have good understanding of the business. They have been delivering consistently. So this is like the consistent compounder, and it's not looking like there's anything wrong currently with the company from a fundamental perspective. So if you want a large cap company from the fundamental space in the pharmaceutical space, I think Divis is a better option, a low riskier option, and it's a slow consistent compounder, not something really fast, but it will give you the gains over a long period of time. And if you look at that conference call highlights, again, Debjani has gone inside, who works with us, has gone inside, gone to all the conference call highlights and got some stuff out, right? So basically what happened recently was the gross margin expansion was led by lower raw material cost, continuous process innovation, and backward integration. And they've also announced that they will do a capex of around 4 billion INR. Okay, that is also happening. Now more than 90% of their carotenoids business comes from EU and US, and we saw that most of it is coming from EU itself. The current annual run rate is 6 billion INR, which is around 6,000 crores, and Divis has just expanded capacity by 100% based on demand. So again, beautiful, right? Divis is again good. Now third stock that I'm going to show you is in the small capish region. Okay, this is smaller than both of these companies, but is also looking very promising. Okay, so I showed you one very big company, I showed you one medium company. Now I'm going to show you a smaller company that is looking very interesting further. It's a well-renowned name. You guys know this name, but it is also looking very interesting. And the third company is called Aarti Drugs. I hope most of you all have heard about Aarti Industries, Aarti Drugs, Aarti Surfactants, but Aarti Drugs is looking very interesting. Let me show you this as well, right? One sec. Aarti Drugs. Okay, so I'm going to show, it's in the 4,600 crore market cap, so it's not very big, very low compared to Divis, and much lower compared to Laurus and Divis. Pharmaceutical space, again, P ratio is slightly lower than the sector P. Doesn't mean it's undervalued, maybe there's something wrong with it. But if you look at the 1 year chart, just in COVID time, it's gone down in 28%. If you look at the max chart, by the way, they recently did a bonus as well. If you look at the max chart, this has gone up and then it's fallen down because I think there was a massive rally at one point with Aarti Drugs. But I'll tell you why. Obviously, this is slightly more risky compared to Laurus and Divis. So if I had to rank it according to risk, Divis will be slightly less risky. Laurus would be medium risky, right? Aarti would be slightly on the higher end of the riskiness. Okay, so highest risk would be Aarti, then Laurus, then Divis. So I'm just making it very clear out there. So please do your own research as well. This is just to make you guys understand from an education perspective. Now, don't worry, I'll share this with you. Why do I say that Aarti looks very interesting? Now, first of all, the Gogri family. Aarti is run by the Gogri family. They're well diversified into multiple things. Aarti Industries, Aarti Surfactants, Aarti Drugs right now, and all handled by the Gogri family. And they know what they're doing. And they also take a lot of kickbacks very well. They give good dividends, good bonus for themselves. Now, why do I say Aarti Drugs looks interesting? Because they're one of the largest producers in multiple different segments, right? So largest producer of emulsified in India, in the world actually, not even India. Another largest producer in the world for this drug, largest producer in the world. So basically they have some unique monopolies here with respect to being the largest producer in multiple different areas, okay? And whenever this starts kicking up, it will do really well. Now, Export revenue, 37% is export revenue. Okay, 12 manufacturing facilities. They have 1,500 employees, 58 plus API molecules. All this is fine. Now let's look at their business. They have three businesses here. Again, API formulation. Or you'll be like, everyone has the same thing. Yes, everyone has the same thing because that is important in the drug manufacturing space. But API business for Aarti, listen to this. All the other business are well diversified. But in Aarti Drugs ka scenario, API business is 80% of their revenue. Okay, 80% of the revenue comes from API business, and one of the largest manufacturer of two molecules in the world, largest manufacturer of three molecules in the world as well. Actually, two in India, three in the world, and leading API producer of 50 different molecules for antibiotics, anti-inflammatory, anti-diabetic, and antifungal. So this sector, antibiotics, anti-inflammatory, anti-diabetic, is a very evergreen sector, right? Because they will always be there. It's not like it's a very seasonal sector. And from the formulation business, they've diversified into formulation with their wholly owned subsidiary called Pinnacle Life Science. And they've also taken an in-house manufacturing as well as outsource model supported in strong. They're doing outsource and in-house as well. So both of that's happening. Then we look at the specialty chemical and intermediary segment. Again, not too much revenue coming from these two segments. Majority comes from API. But here also they're trying to do backward integrated, and they want to make it basically reduce their cost so much that tomorrow with their API business, they can make margins look even better. So this is something that they're planning to do right now. Now, if you look at their API business right now, the API consumption is expected to grow really big. And currently, India imports 60% of its API from other countries. India imports it from other people. Contract research and manufacturing, CRAMS. Again, it's a fragmented market, but it is also growing massively, and there's a lot of hype with respect to CRAMS in the industry right now. If you look at formulations, again, largest exporter of formulations in terms of volume, 14% market share, and it's only at 4,600 crores. So this is something you should definitely keep in your watch list if you don't want to buy it right now. But it's not moving right now. So again, the risk is slightly higher, but it looks very interesting from that perspective. Okay. If you look at the revenue, as I said, 80% comes from this, 13% from formulation, negligible revenue from the other two. But this is still in the early days. There's a lot of innovation needs to be done. There's a lot of manufacturing capabilities needs to be expanded. A lot of capex has to still come. So it's still there. It's not done yet. This will take a long time to grow, but it looks quite interesting from a very futuristic perspective, right? Now, what is the competitive advantage? They need to do capex, a lot of capex. They have good balance sheet, good product mix and client mix. They're also having competitive advantage with few large molecules in the space, and they also have volume business as well. So these are the few things that they're good at, but they definitely need to increase their sales even more, right? And I'll show you what their sales are. Now, client base of the company are these companies. Again, if you look at the client base of these companies, they're quite extensive, quite good. Again, these look very interesting, and they're all big clients. Okay. Again, meet the team. This is me. This is Debjani. Debjani was the one who did the entire presentation. So you should definitely say thank you, Debjani, because she goes through a lot of effort to put all of this out. And just to give you guys a quick disclaimer that this is just an educational purpose video to make you understand the pharmaceutical space. This is not a recommendation for you to buy and sell stocks. If you do want to buy and sell stocks, you have to do it with your own research. Okay. So I'm coming back to Aarti Drugs. I'm just going to go through their financials again. If you look at their financials, 1,200, 1,500, 1,800, 2,100, good growth in EBITDA as well. Good growth in EPS as well, earnings per share, and dividend growth is also happening. So if you look at it from a overall perspective, there is growth coming here. Again, it can be looked at from a long-term perspective. This is not a short-term game as well. And if you look at their cash flow, they are doing a lot of capex. Whatever they can, they're doing a lot of capex because their income at the end of the year is only 280 crores. Out of 280 crores, they're allocating approximately 70 to 80 crores into capex. So that is also what is happening. Now, if you look at their debt, let's go check if they have any kind of debt. The reserves and surplus is currently 820 crores, not bad. Long-term debt is also there, 151 crores, so they have to remove this also. So that's why I said this is still very early. Hence, if you look at the market cap, it's only at 4,600 crores. That is why the risk is slightly higher. If you look at other companies, say for example like Divis Labs, they've been through this entire scenario and they've done everything. So they know everything what's happening. Awesome. Okay, let me come back. Okay, so guys, I hope after this video, you basically gained some kind of information about the pharmaceutical space. I'm going to share this with you guys, so don't worry about that. And I also hope you learned something about the pharmaceutical space and how it basically works. So tomorrow, whenever you see anything happening, you guys can connect the dots really well. Now, a lot of people, when we saw last week or the last 2 weeks, we saw a lot of stock market crash happening, I mean correction happening, it kept going down. A lot of people panicked, and I kept saying, don't panic, don't panic. These are all small things. We have seen a lot of different COVID variants, but I would still say if with the new COVID variant, it seems very dangerous. So I want to tell all of you guys to start wearing your masks again. I know a lot of us don't wear our masks. We think we're too cool, especially me. Even I was not wearing it for the last few days, but now I made it a point that I keep wearing my mask every time I go out, because the new variant, especially that's come in Bangalore, is slightly risky. So I advise all of you to be safe. Okay, and this is not something, this is also going through our vaccine, so just be careful about it, is all I would say, right? But every time you look at the market, don't get too stressed about it. Find good fundamentally strong companies. Say for example, you saw Divis Labs, very strong company from a fundamental standpoint, and you can keep invested for a long period of time in these type of things. These are consistent compounders. Don't try to invest today and become a millionaire tomorrow. That is not the good vibe in the stock market. Go for a long-term game, right? Now that's it for today's episode. Tomorrow I am coming and I'm going to talk about I'm going to do a crypto video. I'm going to talk about the crypto bull run that is happening on the gaming space with respect to metaverse, and I'm going to show you some of the things that I am tracking right now from the bull, I mean, I'm talking from the gaming perspective. So I'm going to talk about all the coins that are there in the metaverse gaming future perspective. So I'm going to do that tomorrow. Again, little tired, but thank you guys for this. Please click on the like button, please click on the subscribe button, and I hope you guys like this. Again, please guys, stay home, stay safe, and if you are going out, please wear your mask and sanitize. Again, I don't want another lockdown. None of us want another lockdown, and if it does happen, it's going to be very bad. Okay, again, thank you guys. This is me, Shashank Udupa, signing off. See you guys.